Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, May 14th, 2013. Well, a continuation of the trend to the upside today. A candle that's made a higher high and a higher low, and a very large white bodied candle. For the previous day's trading, we were waiting for a breakout up above these highs. This market was congesting, making very small gains above the previous high. So we had some decent resistance overhead, roughly around this 1635, 1636 area, and some fairly strong support in the recent past here around this 1622 level. We were waiting for a breakout in either direction, and because we had a bullish market in all three timeframes with regard to Ichimoku, we were looking for the breakout to be to the upside, and that's what we've seen. Solid bullish activity up above the highs of that little area. In terms of bullishness, a very, very strong candle. A candle that opened at the low and closed pretty much up at the high. A candle where we've seen the buyers close with very strong control of this market, and they've shown very strong commitment to taking this market higher for the whole trading day. A lot of upside momentum in this market for today's trading. The size of the body is white and it's very large, and that tells us that the buyers made a substantial amount of net bullish progress on the day between the open and the close. So some good solid upside momentum by the buyers. The only problem here is that the market is beginning to look a little overextended. We are trading a fair way away from the cloud where the market is trading at the moment, but as we move further into the next week or so, the cloud actually moves up to meet the market. So depending on where we trade from here on in, we could have the cloud moving closer to where the market's trading, and therefore the market finding or becoming closer to equilibrium. And that will take some of the pressure off a potential pullback over the next week or so, but that depends on where the market trades. If it continues trading significantly higher, then it will trade away from that level. The thing here with the cloud is that it starts to go flat too, so the further we trade away from it, the more overextended the market is going to look. Now, at the moment, we don't have any clues that we will have a retracement or whatever, so the likelihood is that the trend will continue. So it's important for us to watch the high of this current candle for a potential higher high and higher low. No sign of selling at the moment, no sign of weakness in this market. The buyers are the strongest party in every time frame at the moment. Now, in terms of the Fibonacci retracement, quite a significant event today. Previously, we examined the relationship of the 261.8% level with the previous four candles, and the market found a lot of difficulty trading up through there, just testing above there and selling off, testing above and failing to close above there for the four previous consecutive trading days. Today we've taken that down in a very, very bullish manner, and I think this says something about the strength of this market. It is a very strong market. And if we look at this interaction here with the 261.8% level and this sort of weakness in the market, although we did have candles where the buyers still had maintained control, we haven't seen any solidly weak candles and no retracement. And it tells us that the buyers really are strongly in the ascendancy in this market, and the sellers really don't have any strength. And this suggests that this market has the possibility of testing up to the 423.6% level at 1666. Now, in terms of the Fibonacci retracement, however, we are seeing an extension of that through that 100% level. So we are looking at areas that are multiples of the retracement, and previously we traded through the 261.8% in a strongly bullish manner. We had these small bodied candles suggesting a possibility of a change of trend but requiring confirmation. No strength from the sellers, and then follow through today, but the market has closed exactly at the 423.6% level. So there is a slight possibility of some selling coming into this market, but really this just strengthens the idea that we should be watching around the high of this market at 1651 for a potential higher high and a higher low, and I suggest that that will happen. Our target here is the 685.4%, and very rarely do we see markets extend up to those levels, and the fact that we are trading here around these levels, around the 423.6% level, and even contemplating that we could trade up to the 685.4%, does tell us that this market is beginning to look a little overextended. But really, we need to react to the market. Let's not try to predict the market, what it will do. We can't predict with any great certainty, but let's react. And the reaction here is that the market's strong, the buyers are in control. Let's wait until we see some selling coming in, and if we're long, it could be a time to take profits. But we do really need to go with the flow, so the flow is with the buyers, not with the sellers at the moment. Now, in terms of Ichimoku, we've already touched on the distance that the market is trading away from the cloud. So we have a bullish market in the long-term time frame, beginning to look a little bit overextended, but no sign of negativity coming from the sellers in that short-term time frame based on the candle. But the market is still also bullish in the medium and fast-term time frames by trading up above the Kijun-sen, the pink line, and the Tenkan-sen, and the Chikou span is above the corresponding price action. So it's confirming this bullishness that we're seeing overall in this market. Looking at the Kijun-sen and Tenkan-sen, they're pointing up very, very sharply, reflecting this solid upside momentum. So we have a very strong first time frame uptrend in this market, and we have a very strong second time uptrend in this market based on this market making a series of higher peaks and higher troughs. So a very, very strong market. Now, very often when we have a retracement, the Tenkan-sen, and in a very strong market, the Tenkan-sen is usually the first place that the market finds support. So the area at 1694, 1617 is likely to be a very, very strong area of support. But below there, if we look at these candles around this 1623, 1624 level, we saw some decent support coming in there. So if the market does come off, then that's an area that the market is likely to hold up in. But bullish market, let's watch the high of this current candle for a potential higher high and a higher low, and the potential to test to the 1666 level of the Fibonacci technique.